place, and perhaps people fretting over the fact that Robert Mugabe's got until noon to step down, otherwise he gets impeached. Why that couldn't have happened 35 years ago, I do not know.
Okay, thank you, Zach. Now we've got our Monday morning guests are all checked in the room. We've got Russell Jones here, private investor. We've got John Adamson from ShareTalk.com, David Paul from VectorVest, and Ian Foster from BeAWinningTrader.com. So how do we want to do this? Shall we maybe invite Russell in first and get his take on the day's markets?
Yes, Russell is the markets Wikipedia. There's hardly anything he doesn't know about. Most of the things you don't want to know about, but he knows everything that you need to know. I think I'm very impressed with him, even though he's just a private individual.
Can you hear me, guys? You all right?
Good morning, Russell. Yeah, welcome to the show. Thanks for joining.
Right. The first thing, after that very nice introduction by Zach, I just want to vent my spleen and say that I didn't put too much money into it, but it was a large position. But I lost in excess of 400k last week on Carillion. So we do make mistakes, but obviously the reality on that is that was a gamble stock, and I put too much in. But that's just a kind of warning out to private investors there. You must spread your portfolio. Fortunately, I've got enough of previous gains that although I drank a lot of wine on Friday, it basically it's not the end of the world. Now, I want to go through what I believe is just a forward notice of the week and a little bit of a paper update in terms of what was in the press over the weekend. So we got futures in America strength and going weaker again. They're down over 50, and although we've opened up weak in the UK, all eyes are still on the tax bill. The first stage has gone through the House, as you're probably aware of. Unless we get it through the Senate, I believe there's going to be a problem with the US markets and no Santa rally. Now, they only got 48 to 52 as we stand, and one of Trump's own, a lady called Susan Collins, in today's FT page 4, is against the bill completely. There's talk that they're going to drop the Obamacare to try and get the tax bill through this side of Christmas. Without that, it will be perceived as a failure. Art Cashin, CNBC, well-known individual, he was talking about a 5 to 10% correction on CNBC if we don't get the tax bill through. So we need to be mindful of that. In terms of the overall US markets, they are still only less than 1% off the all-time highs. However, without this tax bill, it could go backwards. The US is massively shorted the housing sector. It's in the FT. There's the retail sector. The retail sector has been massively shorted out there. There is an article which can be easily read, but it's Signet Jewelers is number one, but Macy's all the way down, most of the branded stocks. America is expecting an overpromise, under-deliver this Friday, Black Friday. And obviously, the betting against the retailers probably need to be mirrored in this country, in the UK. Going back to stocks featured in the paper over the weekend, a company called SafeCharge has been recommended as a buy. Berenberg analysts reinstated as a buy with a price target of 350. For the year, they're up 38.77%. Current share price before trading this morning, 293.5. They're in the payment service provider sector, which seems to be doing very well as a sector. So if you are a private investor, I would suggest looking at payment service providers. It is a sector where there are some strengths. They're expecting to expand into lower risk markets, and that's obviously a buy. That was in the mail. There's a sell on GKN. That's come out from Panama Gordon as a sell. This engineering plant obviously had a new chief executive from within the company starting. There's been major issues in a write-off in his individual departments. There's a profit warning given in October. The overall write-off of 1,830 million. Panama's cut the earnings forecast to 23p. Expects to be no final dividend. The current share price of 302 has a target of 230. It also features.
I just want to say, Russell, on the GK and those last two candles, very, very strong. So below 290, looks like there was some interest on that after the massive fall from 360. So just something to know.
Yeah, I think what's happened though, obviously the existing CEO will leave, Nigel Stein, and obviously he was being replaced by this new chap, and obviously because there's problems in relation to that, Kevin Cummings is immediately leaving the board. Now, I don't know. It's just a thought. GKN has virtually lost a lot of its strength in the aerospace division and is relying on car shafts now, basically on a supply basis. But that was GKN.
Okay.
A very small company called Amrit Pharma has had a buy-in by Midas in the mail. Drugs firm. It's got such a small area that only 1 in a million are affected, so I find it hard to have a major upside here, but they have recommended it. Share price is 17.75. They are going to expand internationally, but although they've recommended it's for infants which have a high cholesterol at birth and they are at high risk of heart attacks and strokes. The life expectancy for even people who are treated is 45 years, but although they've tipped it, I just believe because there's such a low number of people impacted, the sales criteria, they're not going to see a massive increase on the share price. So although it's tipped, you can look for it yourself, Amrit Pharma. Quinta, another payment service provider, very interesting. That was tipped in the Telegraph. On the FT, I looked it up. There's 5 buys and 1 hold. Shares are up 57.56% this year at 287.20. They floated 2 years ago. They got a 1.1 billion valuation. This looks quite an interesting share to look at. They paid 176 million, which is for the share registration and service facilities from Wells Fargo, only in July. And they're hoping to expand now to sell their services through JP Morgan, Visa, and Berkshire Hathaway. I don't know if that was Wells Fargo just basically going back to core services. However, Questa has recommended this. Wells Fargo purchases the key, and obviously you should have seen improvement in margins on the US market. So that's a Quinta, but growth 57.56, superb. The Times took a knock at Merlin Investments. Every time I think of Merlin Investments, I think of those poor sods that had the accident on the Spider, and I think that's still an issue. However, since their float in 2013, it's been a lackluster summer this year, and they've not invested in the UK as strongly as they would have before. They've had this overhang of bad publicity, but because of the threat of terrorism and no cash investment, that is termed as an avoid. So that's it. And that's the 5 kind of stocks.
Sorry, Russell, is that, yeah. Is Merlin, or I mean, there are 2 bottom fishing situations there, let's say the GKN and the Merlin. Would you be tempted on either of those?
No,
Right,
because
okay.
I think we're in a negative market, and we've got to be really sensible here. I think unless we have something coming out of America and something coming, the UK's going to be getting tighter next year. I am a Brexiteer myself. However, things are not looking good with inflation linked to economic forecasts. So I would be thinking at Merlin, but disposable income. That's why I've got house builders and retailers really as a sell. There was an interesting article again. It's a potential flotation, but it is a flotation. It's 10 group. It's for the likes of Simon and yourself, Zach. It's a personal concierge service. They have basically got a flotation this Wednesday. The valuation was 35 million in the mail. I looked at City AM, it's 40 million. They currently got 40% year-on-year growth. 60 million members, covering the likes of Coots and Vestco. They've got 700 staff working for them, so it's not a small kind of number of individuals. I don't know how that works, but if you wanted to get a top restaurant, go to a pop concert, sport and event, etc., whereas people used to have a lot of personal assistants in the past, now they're using this kind of facility and service. And unless you've got a black kind of American Express card, which will do it for you, the one which obviously got unlimited spend, this 10 group is floating on Wednesday. So there's 2 days for you to have a look at it if it's worth having a look when it floats this Wednesday.
Well, Russell, the only way that I could be involved in that is we're washing dishes somewhere for them, so amongst their 700 employees. So I'm not quite in that league yet.
Well, from what I understand, you're very good at that at home anyway.
Yeah, exactly.
Now, just looking forward at something else. Tuesday's results tomorrow. There's nothing really out today with any kind of, but of note, there's three biggies tomorrow, which kind of, well, I say biggies, there's three that obviously you might want to look at the day before sometimes. EasyJet, obviously you've had Ryanair's difficulties, although they've been trying to poach pilots, etc., and give them incentives to stay. EasyJet has had a recent surge up. They're 19% up for the year, but a lot of that is in the latter period. They're still forecasting a 410 million profit, which is a drop from 495 in 16 and 686 in 15. However, passenger numbers are up. So that is one which we talk about bottom fishing, Zach. That potentially is one as a recovery, but a lot will depend on the results which come out first thing and the reaction. That could be a perfect day trade stock when you have big reactions in the market, and that's tomorrow. So obviously that's a big day trade facility. Two others, Kingfisher, I think that's going to be not good. They're down 16.52% for the year. They have benefited from Bunnings' unsuccessful integration into the UK. It's because of the costs of rent and rates, etc., and it's cost them much more and a quicker kind of move across. But I still think Kingfisher's an avoid. And AO World, which you might not know of, but they're white goods retailers direct. White goods retailers predominantly have got the lowest margin. They're down 30.49% for the year. That again was in the Times, like EasyJet was on page 3 yesterday. AO World is on page 6. I think that's a complete avoid and a short in temptation for anyone that operates CFDs and shorting. So that's a quick overview in terms of bits and pieces. I don't know if you want me to talk. I can talk about housing in particular if you want to. But I believe
just
Hammond,
quickly. I mean, obviously there's some hopes that in the budget spreadsheet Phil will deliver the goods.
I think it's just one to keep an eye on. Obviously, what Hammond does on the budget on Wednesday. He was all over the TV yesterday stating he wants to get to 300k, incentivizing small house builders. Bearing in mind that the margins on the main builders are paper thin, and they keep their land banks back to obviously restrict supply, so that obviously they can maintain even those paper thin margins because their construction costs have gone up due to the pound and labour. I think you need to make a call on housing because some people might have had a large profit increase for that sector over the last 12 months. It could go the other way very shortly. That's it, Jack, really.
Thank you, Russell. Very comprehensive and enjoyable as usual. Over to you, Simon.
Russell, thank you very much from me. Zach, I think we will go to David Paul next, who is waiting. We heard from David Paul, of course, the Managing Director of VectorVest here in the UK. David was with us last Monday, and he's going to join us again. Actually, sorry, I'm getting my running order is being corrected. We're going to go do the stock of the day with John Adamson. Just a quick sort of 5 minutes stock of the day, if that's all right. And then we'll come to David, who wants a little bit more time to look at the VectorVest program and signals. So let's go across to John at the moment and see what he says. We're looking at
Mr. Adamson, how are you today?
Simon, how are you doing?
Very well, John. Enjoying your Monday morning?
So far, so good. I've not seen too much of it, admittedly. So, yeah, no, it's going okay. So today I was going to look at Hemogenics Pharmaceuticals.
Yep.
So, I think you know this one, Zach.
HEMO. I know very well.
Right then, so they've had some new, well, just a brief sort of overview of the company. So they're basically involved in stem cell transplant for the treatment of blood cancers, mainly in the form of leukemia, lymphoma, and blood marrow failure. So this was essentially an RTO from what was Silver Falcon, which many people may know from AIM. So Silver Falcon acquired Hemogenics for $8 million back. Well, it came IPO'd onto AIM 5th of October this year, with a sort of 2 million placing on top. MCAP's roughly around the 11 million mark at the moment. Share price is 3.1 pence this morning. But today they've had some news that they're actually going to partner with University of Oxford. So really where they're trying to move the company at the moment, this is a research agreement that they've got in place with University of Oxford, and they are essentially looking to sort of move much quicker towards their human trials. So it's a very early stage preclinical trial company, but I think it's got massive potential from a personal point of view, and they're looking to get a new form of blood stem cell transplantation moving forward. And that's we've got 2 products, but they are that early stage that they haven't actually named these particular products yet. So you can have a look on their website for more information on both of those. But I think
well, John, I'm just wondering,
an interesting one to watch over the coming weeks, because they've not released much news into the market yet. And this is the first of a couple of things. The other thing that is that they're partnering with Lake Pharma to help with these trials. So sorry, go on, Zach.
Yeah. Just wanted to say, given that they are involved with Oxford University, wouldn't you have thought there would have been a rather more sprightly reaction in the share price than we've seen so far? I mean, it seems to be quite a game-changing situation there.
Yeah, I mean, I think there's a minority of retail investors that have got an awareness of this stock, but I don't think the story of the stock is not necessarily known to the wider market. So certainly if you go on social media, you'll find a bit of chatter about Hemo in particular. I think mainly because of the connection with Sylph.
Yeah.
But in terms of true sort of pharma investors, I don't think it's definitely not hit the sweet spot for them yet, to my knowledge. So I think we've got to see a bit more coming out before we see that, if you like, for want of a better phrase, that herd come to the fray. So yeah, I mean, I think today's news, it looks good on the face of it, but it doesn't give a huge amount of detail in timelines, which is what a lot of people will look for to see something that's going to be game changing in terms of moving the price forward. But it's certainly a step in the right direction, and you can't, in terms of a research partner, there's not many bigger players out there worldwide. So
that's what I was trying to say.
Standing.
Okay, is that your lot, John?
I think we've sort of got a flurry of sort of good pharma companies at the moment. You look at Motif Bio, Optibiotics, Sinclair, Sarium. There's a pretty big range to choose from on AIM at the moment and the main market. So, it's take your pick really with pharma. I mean, we just mentioned Amrit before. That's another one.
Yeah. Yeah, they seem to be quite. There's an Oxford Pharma up today as well. So a bit of a mini pharma day at the moment.
As is most days these days, to be honest, on AIM, if that's what floats your boat. Last thing to mention about Hemogenics is they are going to be appearing at Share Talks Investor Evening on Friday the 1st of December. So if you want to book onto that, have a look on Share Talks Twitter feed, and I'm sure you'll find the booking link.
Yeah, I'll be there as well, but I hope that doesn't put people off.
Surely not.
Yeah, well, there we go. John Adamson from Share Talk, thank you very much indeed. We look forward to your offering. Same time tomorrow, I hope.
Thank you, Zach. Yep, no problem. See you tomorrow.
Don, thank you from me. We'll put that link out to everybody as well, so they can join you.
Thanks, Simon.
Where is the investor evening? Just out of interest, is it London?
It's going to be in Walsall. So we've got a nice pocket of investors we know very well in the Walsall area. So we're going back to service their needs. So there'll be Hemogenics, Thor Mining, Prairie Mining, and let me think of the other one, Savannah Resources, which is a lithium play. So okay. Yeah,
there we go.
Should be a good night.
An evening in Walsall on the 1st of December. Okay, thank you, John.
Thank you.
Okay, so now we are going across to David Paul at VectorVest. David, good morning. Your microphone's off. How are you?
Good morning, Simon. I'm just fine, thank you. Yourself?
Oh, very good. You sound chilled and calm and confident, which is great. Good way to start the week.
Well, all is good. All is good so far. All is good.
Wonderful. We heard from you last Monday, which was great. So we thought it would be great if we could make this a regular date, as they say. Go across and have a look and see what the VectorVest system has been saying over the last few days. So let's share screens so that we can see your system. You should have the confirmation. There we are. We're looking at the home page now. We can see the color guard mildly bearish. Do you want to talk us through what's been going on?
Yeah, sure. As we move into the trading day, well, from the close on Friday, Simon, we had the long-term trend or the underlying trend of the UK market turn down. When I spoke last week, the short-term trend was down, but the longer-term trend was still up. On Friday, we had a major trend change. So that, for me personally, means that all buying of shares and accumulation of shares is off the table until that changes. So we can have a look. I made a PowerPoint presentation so that it saves me sort of pulling charts up a little bit. And if I just maximize that for a second, then we'll go into the program. Bartolito himself, who put VectorVest together, says that the most important thing to know is whether the market is going up or down. Everything follows from that. So at the root of the VectorVest approach is to try and work out in the time frame that you're trading in whether the market is going up or down. And today the short-term trend is down and the long-term trend is down. So if you're a short-term player, then we believe that you should be looking at the market for a short, and that would be in fact fairly useful information. This morning the market's falling, at least it's opened down the last time I looked. So the overall London market, a buy signal, underlying trend turned up in December, and it ran right through to the 4th of July. And then we have bounced back and forward in this range during the course of the summer. And that's the last sell signal that came in on Friday. Okay. Sell signal was preceded by the momentum indicator, the MTI, making a falling top. So it wasn't entirely unexpected. But for the last week, VectorVest has been telling people not to be buying shares. Okay. I don't think that it's that much, Simon, because the MTI is down here, and it's also already showing a little bit of what technicians call reverse divergence or hidden divergence. So we've got a very important line in the sand across here, and we've got the MTI back down under 1 showing divergence. So this is very, very important level. So let's just watch this level break down through this, and clearly my reverse divergence is off the table. But at the moment, the longer term trend is down, the shorter term trend is down, and that's going to define what I'm doing. The American market, the longer term trend is also down, and we're seeing a little bit of a rally in the short term trend, so maybe slightly stronger. Here we've got the long-term trend of the American market down, and I hear with the previous speaker, a couple of speakers ago, spoke about the tax bill. I think he's going to struggle to get that through myself, but that's an opinion as opposed to a fact. The fact is that the long-term trend of the American market is down, and we've had a little bit of a bounce over the last day or two. A breakdown through that low, or these lows, should I say, would be very serious indeed. And of course, this market can pull back right to here, and the up market is still intact. So I wouldn't be at all surprised to see a bit of a pullback there. So in an environment where I don't think we should be buying stocks at all, I can see three shares that I'll be looking at should the trend of the market turn back up again. And those three stocks that come out and look quite good in a negative market are Games Workshop, which I think wants to move up the page, a big stock, the Prudential, and the Volex Group. And I've charted those on the next particular chart, three charts. Games Workshop has been, that and Victoria have been my best percentage winners this year. And our last buy signal in the share was at £11, and it's now at 22. But it pulled back, and it pulled back into this area where this resistance, I believe, became support. This was what I talked about last Monday. And the stochastic is showing a reverse divergence. The share is undervalued and growing earnings at one hell of a clip. There's the earnings growing, and that's the engine that's driving the share price, ladies and gentlemen. So make it a bit bigger so you can see it. There's the earnings rising pretty strongly indeed. So we have a technical picture that looks exceptionally good, and we've got a fundamental picture that looks exceptionally good. And the third part of the matrix is the general market, which doesn't look so good. Okay, so at VectorVest we put together the fundamental position of a share with the technical position of the share with the technical position of the overall market. When all three are saying yes at once, then you get very lucky at this. But at the moment, we've got 2 out of 3 saying yes. Simon and Zach, can you hear me there okay, or am I talking to myself?
We can hear you very well. It's just like Radio 4.
Okay. Morning, Zach. How are you? Great to hear your dulcet tones. So that looks to me as if it wants to move and move strongly up the page. And I am in the share, as I say, from £11, but I want to add to the share. And as soon as I see some of those green lights on the front of VectorVest, and a little pointer moves into the green and says it's okay to buy shares again, then I shall be adding to Games Workshop. I haven't added to it yet. On the way up here, although I did want to add to it, I was not unfortunate position, Zach, of wanting to buy something, but I had no money left because I was fully invested. Many years of experience tells me that if you're not fully invested when the general market is rising, that it's very difficult to outperform. So when the general market is rising, as it has been, then I'm always fully invested. So that looks good, folks. That looks good. So if you've got it, certainly hold it. If you haven't got it, then just keep your eyes peeled for the general market to turn back up again. Very, very important levels in the FTSE this morning. So the other one is the Prudential. And Prudential clearly a company that we all know of. Earnings per share is going the right way. And Zach, I don't know what you think of this particular pattern. Take off the stochastic, give us a bit more room. VectorVest believes that the share is significantly undervalued. We believe it's worth £26. It's trading at 18. It's been in this range, and it seems to have traded this little cup and handle pattern, and it's breaking up. It's on a buy recommendation in VectorVest, and it seems to want to break up the page again. The technical picture, I believe, is good on the share. The fundamental picture of the share is good. The only thing we have to worry about is the sentiment of the general market, which will certainly drag on a large index stock like a Prudential. Maybe Games Workshop, and the next share that I'm going to talk about will in fact be able to escape the attraction of the general market, but the Prudential won't. But nevertheless, it's had 2 or 3 very strong days when the general market was falling. So I like the look of that, but the third part of the matrix is not teched as yet, i.e. the general market. And this is one that I talked about last week that's going the right direction in a negative market. Volex, undervalued, and VectorVest, in fact, revalued the thing a day or two ago, well, in June, should I say. It very interestingly making rising bottoms here, and those lows at 70p, in fact, couldn't come back and kiss the old top. So that's always a really precedes a strong trend, and it's moving up the page quite nicely. And I think that we're going to move from 78 to £1 in this share relatively quickly indeed. So 3 shares, 2 relative small shares, and 1 index share that have got good fundamental positions and a solid trend. The only thing that we have to wait for, Zach and Simon, are the general market to right itself. Okay.
My share, I'm not sure I could wait for the market trend to improve on those 3 stocks, but obviously I'd have to be disciplined and do so.
Well, yes, I'm trying to follow the rules, and I understand exactly what you're saying. Sometimes when you wait for the market to turn, the best shares and the strongest shares have already waved bye-bye at you, and it's difficult, but experience has taught me over the last 5 or 6 years now with VectorVest that when you're in sync with that little thing on the front page, the color guard, that your trades go strongly in your direction. At the moment, we don't know whether this is a small pullback, the same as the last 2 pullbacks that we've had during the summer, whether it's something much more serious than that. So market America-wise has been driven by this tax reform, and that doesn't look quite so good over the weekend, as a couple of speakers ago mentioned. One thing, I am short the pound. I was short of it last Monday, and it went well, and then I got stopped out as it went back up the page. I've made a few bob. I'm back short of it again. At least I was short of it the last time I looked. I haven't been stopped. I'm looking for an entry short of short of the euro as well, and I want to be long the Canadian, but I had a really good trade in the Canadian last week. I think it will pull back to 27.30, so I'd be interested in it around 27.30. And I'm short the copper market. I've got a little position short the copper market. Nothing worth, but I think that the copper market needs a little bit of a pullback. And I think I've been speaking to all of the VectorVest members about resource shares in that they could be a little bit toppish, okay, after a very, very good run. So 3 shares that look exceptionally good. And the only thing that we have to wait on now is for this little pointer to get back into the green, and VectorVest will say, VectorVest advocates buying safe undervalued stocks that are rising in price at this time. A very relatively conservative approach, Zach, but I am a conservative guy, and to try and build wealth without a great deal of ups and downs.
David,
you sound like a conservative guy.
Sorry, Jack. So, a question from one of our viewers, another David. He said he was listening last week, and you mentioned a presentation that you're starting in December about spotting shares for 3 to 5 day holds. Do you have any more information on that?
Yeah, we put that back to January. We just didn't have enough time to get it ready in time, and to get it ready in time, the presentation would have been too close to Christmas to attract a decent crowd. So that we're going to be doing that in the first couple of weeks in January, and I'll certainly be talking about it on here.
Okay, sure. That's great. Thank you. And just to mention as well, you are joining us on the full day webinar on Thursday, this Thursday. The Round the Clock.
That's correct, Simon. At 10 o'clock.
Monthly summit. Yeah. We're starting to refer to it as the monthly summit now because.
Sounds great, man.
but we've got lots of RTCs going on, so you'll be with us for a full hour. We can get into a lot more.
That's correct. Yeah, I'll go through the whole VectorVest system, and I want to talk about our worry-free trading plan on Thursday morning as well, which is a long-term methodology of making money. If I was managing your money, Simon, I would put 80% into worry-free trades, and 20%, I'd probably leverage myself up a little bit, maybe 2 to 1, 3 to 1. Most of the great mistakes in trading are to do with leverage, and we think we know what's going to happen next, and unfortunately nobody knows what's going to happen next on a trade-by-trade basis. But the big paradox, of course, is you do all your research and you speak to everybody. The only reason you're putting the trade on in the first place is that you're sure it's going to go up, and if you're sure it's going to go up, why not have a big punt? And that paradox is quite difficult to get across in your mind, to get to a point where you can think in probabilities, where the outcome of any one trade is random, but the outcome of 30 trades, if the fundamentals are good, if the technical picture of the share is good, and the technical picture of the overall market is good, then over a series of 30 trades, you can predict the market with a great deal of accuracy. So thinking in probabilities, the most difficult thing I've ever had to do.
Well, indeed. David, thank you very much. The 1 or 2 questions again. Marguerite, I do see your question asking about the indications that the fundamentals give. I think that's something for Thursday for David to be able to explain once you see the VectorVest system being explained more thoroughly. Today we're trying to have a more current, just looking at what the system is saying about the market rather than how it works, just sort of what's being said. So we'll leave that for Thursday if we can. David, thank you very much again for joining us, and we'll look forward to speaking to you again later on in the week.
Gentlemen, thank you very much indeed. Take care. Have a great day.
Thank you, David.
Cheers, Zach. Bye.
Zach, I'm going back to your screen just for the moment. We've got our next speaker, Ian Foster, coming in to give us an update on the charts. Ian, of course, a more technical trader. Price action is Ian's thing, so we will go across to Ian Foster. Then we've got a bonus this morning as well. Alan Green has joined us back in the room, so we'll be going across to him in around just over 10 minutes time to see what he's got to say on the stocks. So Alan Green from Brand UK. So let's go now. If you want to, what are we looking at just now, Zach? Have you got something here?
Just the euro dollar, just always the way the markets are. A bit of irony there that you would have thought with the problems, the political problems in Germany, that the euro would be down. It was marked down overnight, and then obviously as soon as everybody gets back to their trading desks at 7 o'clock, 8 o'clock this morning, it goes through the roof. Bit of resistance there at 117.90, but I suppose given the way it's rebounded, looks like a rather nasty bear trap here for the euro. We'll see what Ian has to say about that.
Ian, good morning. It's Simon Campbell.
Good morning, Simon. Good morning, Zach. Excuse me.
Thank you for joining us. We've had already this morning quite a few stocks. Look at the markets, the fundamentals. We know you're a technical trader. So should we go across to your screen now and see what the price is telling you on the open markets?
Can you see my screen?
We can, thank you.
That's great.
Okay, so what are we looking at here?
What we're looking at, well, I think Zach mentioned the euro, and the euro has very forcibly moved northwards here this morning. But let's look at the slightly bigger picture, and looking at the daily chart of the euro, we had this situation last Wednesday, which was a very bearish bar from a technical price action perspective. And Thursday it did continue, but you can see that we're making small range days, Thursday and Friday, and today, as Zach rightly says, with the news over the weekend, it is gapped down, so it has. But if I flick on, sometimes in situations like this, it's always best to look at the bigger picture. And if you see, this is last week's weekly bar, and it is a bullish bar. And what I mean by a bullish bar, I mean it is closed above the average price, in other words, the balancing point of the bar. And that, on a technical analysis basis and a price action basis, means that your objective for this coming week is to buy any dips in the market unless it breaks this low before it breaks this high. And the high last week in the euro dollar was a high of 118.60. We're trading presently at 117.90. So from a technical analysis point of view, really and truly, the euro dollar, for it to do as it should do, it should break up to the upside and take out this 118.60. And the dip down this morning would have been an opportunity to position yourself with a lower risk. And again, if we flick over now to this is the software, my software, Trend Trader software, you can see we've come out of the weakness, and we have, now this is the 15-minute chart, a guidance chart underneath. So a 5-minute chart above, looking at the bigger picture underneath. It has just recently started, the bigger picture chart started to go neutral, and we went straight up the page here. What will be key from an intraday perspective is the retracement. We want to see the retracement making a lower confirmed vertical bar high, and the blue bars to still be intact. So if anybody's not in this market yet, you just don't hop on board here. The risk is much greater. I like to see the retracement, in other words, the market to pull back. That is, yeah, but isn't that,
Ian, on that situation, wasn't it just relatively easy to just go in there at the start of the blue and enjoy the ride?
Of course, and again, Zach, the key too is, it's very important. I don't know whether many private traders do, but it's very important to look at daily bars, weekly bars, just to give you a bit of perspective. I often say it's like driving a motor car. You're blinkered to what you're doing by looking in front of you, but you also have to be aware if you go to overtake. Look in your mirror to see is anybody coming up beside you, and it's the same in the market. So again, sometimes when you struggle to see what a market is doing or why it's doing this, perhaps it's always good to look at the bigger time frame picture, and you can see, Zach, exactly when you're analyzing. When I analyze a bar at the end of each week, especially this morning was an ideal opportunity once you've seen the blue bars with the weekly price action perspective for it to break to the upside. You're quite correct. Yes.
Yeah, but what I'm saying there with that situation, that with the news, it would have been very difficult to go to go long unless you had the help from this indicator of yours, and therefore, yes. I mean that was the edge. I'm sure everyone and their mother went short and has been selling on this rally that we've had from 117.30 and above, and totally got cleaned out, and therefore this is what's given would have given people the edge not to lose money this morning, the indicator.
Well, very much so. Yes, it does do that, because it is the sum total of buying and selling pressures, and when the sum total of buying pressures outweigh the sum total of selling pressures, that's why the bars turn blue, Zach, in that particular instance. So if we look on and move on to the cable pound dollar was a slightly different chart over the at the end of the trading week. It was a more straightforward chart, and why I say that was because this particular bar here, this particular bar was again last week's weekly bar, which was a very bullish bar. So it was also bullish, but instead of having the small range days on Friday, if I just click on the bar, we also had a bullish bar on Friday. Now this is today's price action. So on that basis, apologize. On this basis here, again, with the probability that today would break to the upside. And again, Zach, if we look at the cable market, look, just a beautiful scenario. All right, it started to turn blue, admittedly, in the middle of the UK night, but we had this small retracement here, and there was no further opportunity. So even if we didn't want to chase, because we're not up at 5 a.m. in the morning, and I want to be transparent, but when we had this little retracement here and the bars remain blue, so it's still telling us that the sum total of buying pressures is still much greater than anything else, and again you had the guidance chart, the 15-minute chart, also with the blue bar. So that indicated that was just further enhancing what the daily bar was telling us from the close on Friday. And obviously then again the weekly bar was backing that up. Very plain and very simple to see. So that's the two main currencies. If we go on to the just looking at the euro against the pound, you can see that the market went in from a buying scenario into a selling scenario, and this is where we are at this minute in time on an hourly chart. So again, I would say that any buying pressure that comes into the euro here, again the pound, is probably a shorting opportunity at this stage when you flick onto from the smaller time frame charts. But moving over, Zach, we look at a couple of the indexes, I think, and again we have the FTSE, I think, to look at first. And I'm going back to this bar, which again, please try and ignore this little bar. Unfortunately, using MT4 platform and the market's opening on a Sunday night, it forms this little bar for about 2 hours. So this bar here, not this one, this bar here, this is Friday's bar, this is Thursday's and Wednesday. So going back to last Wednesday, we had a bearish bar, and the low of that was 73.51. And the only time that bar was going to fail was if it would have taken the high out without taking that low at 73.51. The high was 74.14, and I think the highest it got was 73.89. No, 74.05 actually. So it went within 9 points of the high on Friday. And again, the market has come down and it has now broken through this 73.51. And again, just looking at the smaller time frame charts, you can see obviously the market had this bit of a jolt up at coming up to the opening. This is 7:50 this morning, and this is where we are. So we have red bars indicating weakness. And again, if there's a retracement here, probably because it has achieved its price action daily objective, it probably would be another shorting opportunity. The DAX has actually changed a little bit, slightly different because of this great weakness this morning, very similar to the euro dollar. And as we speak, it has went into rally mode. But if I click on a 15-minute chart, I apologize, that's just my alert, giving me the alerts. You can see now, so those are black bars, but the reason for those is just they were actually in a proper setup. It's actually green bars, which giving me a neutral trade on the should be giving me a new, yeah, there we go. The reason they were black bars, in case anyone's asking, was because when I was displaying the daily charts, it's much easier to change the bars from lime green to black. So on a 15-minute chart, we have now come out of this selling pressure. Look at the selling pressure the whole way down from Friday and into this morning and during the night with the weakness coming out of Germany. And we went into a neutral mode here. But looking at the bigger picture, again on the weekly chart, the low last week on the DAX was a low of 12.844. And this morning we went to a low of 12.856. So we have not achieved our weekly price action objective as we speak. So again, I have to say that I would be looking for any rally in this market is probably going to be a shorting opportunity. So therefore, it's a matter of keeping an eye on the smaller time frame charts. Again, our 5-minute chart is in the blue mode at this minute in time. But I would be probably, from my perspective, I would be looking more for the short side, Zach.
Okay. Is there anything else on your menu today?
No, well, just I'm keeping a close eye on this US. I mean, as a few of including David Paul and that, and many other commentators, each time that the Dow and the American markets have, you think this is the correction that would only be healthy for the market. Each time that has happened, they've used it as a buying opportunity, Zach. But when you get in scenarios like this, when you've got bullish bars that have been broken to the downside and bearish bars broken to the upside, and then Friday's price action is another bearish bar that it should have broke to the upside and it's broke to the downside, that is letting me know, yes, not nice from a trading perspective, but it's also letting me know that there's something going on here. And I think this market probably, and there's the key low there, the daily low is the low of, and this is the live market, by the way, this is the 2:30 p.m. to 9 p.m., not the 24-hour Globex. The low trade there is 23,242. So the 23,242 level is key in the Dow. Break through that there and a close below that, I think we're going in for a deeper retracement.
Well, the only thing I mean, there's a lot of people who try to get bearish on the Dow, and I don't think Trump is going to get his tax cuts either, because the powers that be there don't want to let him do anything. It's basically a lame duck. But I just don't see the U.S. market falling ahead of Thanksgiving, and in fact, I don't even see it falling ahead of Christmas. I think if there's going to be anything, it would be in the new year. This is just not the time for any serious correction. If there was a dip, it would be a dip to buy into. But we'll see if the wise heads are correct versus me on this particular occasion.
No, again, maybe in the bigger picture, I know, and you know, as well as myself, that there is always a Christmas rally, and in doom and gloom there always appears to be some excuse to create a Christmas rally. The only thing from a trading perspective, and remember, does it matter if we're trading the markets? We're not looking perhaps for 400 or 500 points. Yes, wouldn't we? It would be beautiful to get them, just the same as this 1200 point move up here, going with a 1 hour chart, just when the software started to turn blue at 22,364. But if you take a look at the hourly chart on the Dow Jones recently, what do you see? The blues disappeared, and now you're either getting a sign of green or red, and just the last 3 hours of trading on Friday on the live market has went red. So again, you know, there's an opportunity there probably from 23,300. Even if the market was going to go into the Christmas rally, that doesn't mean to say, Zach, that there will not be a little bit of a shorting opportunity between now and then. How big of a shorting opportunity? Up to now, there has been no real shorting opportunity. There's been no follow through. Each negative move has then quickly bounced the next day, and that pattern could continue. But we have to be prepared. We have to be prepared in case that is, because you know what the markets, when everybody thinks this is what's going to be again, it's going to be another buying opportunity after the bit of a sell-off. One of those occasions, as you know, Zach, Sod's law, as the saying goes, that's when the market's going to tank, and that's when we're not going to be in it. So we have to trade what we see in front of us.
Ian Foster for beawinningtrader.com. Thank you very much indeed. Speak soon.
Ian, thank you. From me, 1 or 2 questions have come in, but they're sort of how-to questions regarding the system and the methodology, which is today is not the place for that. But maybe we can talk about getting you back on Thursday for the round the clock summit, if you're available. I'll talk to you offline about that. But Ian, thank you very much indeed for joining us this morning.
It's a pleasure. Thank you very much. I thank you. Bye-bye, Zach. Bye.
Bye.
Zach, we are just about 5 minutes to 9. Our final speaker, Alan Green, is with us in the room. Good morning, Alan. You should be able to hear us now.
Good morning, Simon. Good morning, Zach. How are you?
Good morning, Alan. It's been a great show so far, and now here you are.
Indeed. Just the icing on the cake, just to give you that final push into Monday.
That's exactly what I meant. Yes.
Good morning, Alan. Would you like to share screen,
morning, Simon.
or are we okay just to talk with Zach's charts?
I got some charts.
Yeah. Zach, could you pull up a chart for Feedback PLC FDBK?
Yes, that is possible.
Okay.
But go ahead, because it takes me a while to get these 4 letters together. FDBK. Okay.
I know your typing skills are
limited, yes.
Limited, yeah. Okay, right. Good morning, everyone. I want to just discuss briefly 3 companies this morning. Firstly, Feedback PLC. This is a microcap company worth just under £3 million sterling. Feedback have a proprietary medical imaging software called TexRad, which is used to help identify tumors and medical conditions that would otherwise be missed by the naked eye. This morning, the company really has, it's a landmark announcement for the group. They have secured the first CE mark for TexRad lung, and the company have been working towards this for some time. It was expected back in May, and it's finally arrived this morning. What this means is that TexRad, whilst it's in use globally on a commercial basis, it's now going to be available for clinical use globally, and will be bought by medical institutions. And the first CE mark, being the rigorous regulatory review that it is, will also be applied to other spheres of medical technology. So it's expected that the TexRad will be now used in the future for a number of other medical applications aside from the ones that that there's known for. So the share price up about 10% this morning, but it has traded as high as 5p. We're currently trading 2.2p, and I think in time, as the markets look at this, they'll realise that this is absolutely huge in terms of potential, and having a CE mark on your belt really is complete validation of the company and its technology. And at this level, one would expect not only that the medical industry worldwide will take a much closer look at what TexRad and feedback are all about, but it will also attract the eyes of some potentially bigger medical predators too. So just wanted to bring that one to your attention first. Any thoughts on this, Zach?
No, I mean, it's been a good contender, let's say, because of that. Their unique IP for quite a while. It's just a matter of it taking off and getting that momentum.
Yeah, and the CE mark is the validation, and I would expect now to see this share really start to move. It's consolidated sort of around the 2p mark for some time. The company back in March this year also raised £750,000 cash towards running costs and marketing costs, and obviously that money is still in the pot. A lot of it still in the pot, and I think we can expect to see activity ramped up now the CE mark is in place.
Okay, great.
So our second stock, just wanted to. I looked at this last week, and whilst this company is well known, I'm not going to sort of go into too much detail. Advanced Oncotherapy, Zach, if you could bring up AVO.
I will do so.
As a chartist, there is a technical feature here which I think investors should take note of. Brief overall description: Advanced Oncotherapy is developing a proton beam therapy machine called LIGHT, which is light image guided hadron therapy technology, and it's a beam of protons that's used to treat cancers, and it's like a very finely tuned cyber knife, I suppose. That would be one way of looking at it, to treat tumors and to treat cancers. Unlike radiotherapy, of course, which is conventional but very clunky and a technology that takes up a huge amount of space. Proton therapy, this machine, the LIGHT machine, it's a very light machine. It's a very small machine, and it's relatively portable compared to the other technology in therapies such as this. But Advanced Oncotherapy are also building a treatment center in Harley Street. They expect with the LIGHT machine, the first superficial tumors will be treated at the end of next year, so we're just under a year away from that. And in March 2019, the Harley Street Center will be open, and then we'll be treating people and patients from then on. And if you're in London, if you walk down Harley Street, you can see the construction process taking place. But the stock has consolidated. It jumped up. It had been trading sort of on the floor for some time, dipped as low as just under 10p earlier this year, and it's popped back up to 30p. But it's now consolidating around the 30p mark. But on the chart here, you'll see what looks to me to be the beginnings of a golden cross, unless I'm very much mistaken, which is where the shorter-term moving average passes through the longer-term moving average. And this is an encouraging sign. I think if anything is going to be a trigger to push the share price higher, given the time frames the company has laid out already for its fundamental developments, I think this technical trigger could see the stock start to move higher in the near future. Is that your reading, this Zach, as a technical expert, as it were?
Well, expert, obviously expert. I like it actually just because of the consolidation you've had since the start of the month above the 200-day moving average. I suppose that's like the brown line there. It depends what color, how good your eyesight is. But we've had many days now of the share price above that 200-day line. Yes. And for me, that's the most encouraging part. This is sideways, what I call a sideways shuffle ahead of a retest of the best levels. So, I mean, we've also consolidated half or more of that move up at the beginning of October. So looking very nice indeed, I think.
Okay, that's good. Yeah, I think so. I think this with this cross starting to form, I think that's it's very encouraging. But as you say, the stock has traded above the 200-day line, which is highly significant.
It's taken a long time, hasn't it, Alan?
It certainly has, Zach. It's taken, yeah, it feels like a lifetime. But I think we're starting to get the company's starting to move towards, you know, when you were less than a year away from actually being able to treat your first patients in medical terms, that's quite something. So yeah,
but hopefully a saucer reversal there as an extended base. The shares are made over the course of the year, so that does look much more encouraging than before.
Yes, indeed. Okay, thanks for that, Zach. Finally, can we go to Petrofac PFC?
Oh yes, I discussed this on Friday. I was very pleased with myself.
Yes, indeed. Well, this is a company that I've discussed. I should declare actually at this stage I do hold stock in all three companies. So you know that obviously is significant from a trading standpoint. But Petrofac. I think you take this view too, Zach. It's very much a proxy for the oil industry. It's an oil services company, so the big oilers or the big oil companies out there will use Petrofac to supply its engineers, to supply equipment, to supply and to supply resource to drill and to develop wells and to develop resource supplies. Petrofac also has its own block of assets too, which are part of the company valuation. The company, as you can see, the share price took a clobbering sort of early this year, but even then, when the shares were trading around 9p, 900p upwards, many analysts were saying that it was trading on modest multiples and had a great dividend yield, but there's been a shadow hanging over the company, something of an elephant in the room, in that the founder and chief executive, Ayman Asfari, was fined 685,000 euros by the Italian authorities for illegal trading in Italy, something which he vigorously, in inverted commas, contests, and obviously this story is rumbling on. So from an integrity and credibility standpoint, this has been hanging over the company for some time, but nonetheless, I think Petrofac, just as an entity without the chief exec, it has a broad spread of risk. I view it very much as a proxy for the oil industry, and clearly, you know, with the expectations for the oil price to at least stay where it is for the next little while, if not to start to climb higher again in Q1 of 2018. I think this company offers a very good play. It's also it was paying a chunky dividend back when the shares were trading around 900 pence upwards. So the yield, unless the dividend policy is altered by the company, the yield is something around 12% at the moment. So if you just hold the stock, it's a very solid dividend payer going forward. But I think most of all, the uncertainties over the company, which and the issue with the chief executive, have pushed the share price so low that there are rumours that predators are starting to circle the company, and of course that's seeing the share price bounce up and down like a yo-yo. But every time it's gone down to £4, it's bounced back quite strongly, and indeed over the past few months we can see the fluctuations, and it's very much trading in a range. And my view is that just in the past 8 weeks alone, the company's won 2 contracts worth 700 million euros and $270 million. So gives you some idea that of the sort of money this company's the contracts this company's capable of winning. If you throw some M&A, the possibility of M&A into the mix as well, given the share price where it is, it has to be a very attractive investment proposition, albeit risky, because the outcome of the case with the chief exec is still unknown. But all the while it continues paying this dividend, really, what's not to like?
Alan Green from Brand Communications, thank you very much indeed.
Thank you, Zach. Thank you, Simon.
Thank you very much, Alan. Thank you. Zach, just before we go, Russell just saying Schlumberger and Halliburton are potential buyers there, just on the
Yep.
of Alan's talk.
That is correct.
So I think that brings us rather neatly. We're just a few minutes over 9 o'clock. I think that wraps us up for today. So Zach Kamir and all our guests on this morning's show, thank you very much, and we'll see you again in the morning at 8 a.m.
Thanks, guys. Cheers.